So what does this mean for NIO? Firstly, it affirms the importance of NIO's focus on technological innovation. While other manufacturers are struggling with software and platform issues, NIO's investments in proprietary technology and strategic alliances are setting them up for a very bright future, in my humble opinion. Secondly, the competitive landscape is becoming increasingly collaborative. NIO's partnerships and alliances like the Battery Swap Alliance are not just about immediate gains, but building a sustainable and competitive ecosystem. This approach aligns with the broader industry trend, even a global industry trend, where automakers are realizing that collaboration can spur innovation a lot faster than having their own isolated efforts. If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi. Happy Friday, and welcome back to the Courtside Financial Podcast, the podcast where we talk about business and technology. Today, we're focusing on how the critical role of technological innovation and strategic investment affect the electric vehicle industry, with a special focus on our favorite company, of course, NIO. So this is going to be a super interesting episode. If you're new to the channel, make sure you hit the like button, make sure you hit the subscribe button. Click the notification bell icon and leave a comment down below. All your engagement really does go a long way in helping out the channel, helping us to reach a broader audience. So we do thank you for that. And without further ado, let's get into today's episode. It seems like there's about to be a shift in focus in the EV industry. Traditionally, sales figures have been the primary indicator of a car company's success. However, NIO is trying to flip the script a little bit. They're emphasizing technological innovation over sales numbers. This change in strategy is evident as seen by recent remarks in NIO's executive leadership, who have openly criticized the obsession with weekly sales rankings. For example, Quinn Lee Hong, NIO's president, has emphasized a disdain for these weekly sales rankings, calling them low-level involution. Now, why is this shift significant? Well, because it highlights NIO's long-term vision of leading through technological breakdowns rather than some sales numbers when they're just at the beginning of their journey. Despite facing financial challenges with a net loss of 18.35 billion yuan in 2023, NIO continues to invest heavily in research and development. In fact, NIO's research and development expenses exceeded 13.43 billion yuan just last year, reflecting the company's commitment to innovation. NIO's recent technological achievements include the development of their own chip, Shenji NX9031, and the introduction of the Sky OS operating system. Sky OS is the world's first AI-oriented full domain operating system for vehicles, integrating various functions like networking, control, intelligent driving, and digital cockpit into a unified platform. This is a pretty significant step forward. It's similar to what Apple has done for smartphone. Now, while these achievements are impressive, they do come at a cost. NIO's substantial investment in R&D has not yielded immediate financial return, posing a challenge for the company's short-term profitability. And if you look at the stock price, investors clearly are not having it right now. However, there are signs that NIO's strategy is starting to pay off. In Q2 this year, NIO delivered over 57,000 vehicles, exceeding their delivery guidance and achieving 143.9% year-over-year increase. It's important to note that NIO's focus on technology isn't just about creating smart cars. It's about creating a comprehensive ecosystem that can sustain long-term growth as well. This is where NIO's Battery Swap Alliance and partnerships come into play, with companies like Chang'an, Geely, Chery, GAC. These collaborations establish a robust infrastructure that is poised to support NIO's long-term future. Let's talk about Envo, NIO's sub-brand that's set to drive significant sales growth. The Envo L60 is poised to compete with Tesla's Model Y. It leverages battery swapping as well to address one of the biggest pain points that electric vehicle owners have, which is range anxiety and charging time. While the model holds great promise on paper, it'll take some time to see if it has an actual impact on the market. Shifting gears, let's talk about Volkswagen and their recent strategic investments into the electric vehicle market. Since September 2022, Volkswagen has invested 74.4 billion yuan in China, focusing on intelligence and collaboration. Their partnership with XPeng Motors, which includes a $700 million investment, which is particularly noteworthy. This collaboration aims to enhance Volkswagen's capabilities in smart autonomous driving and expand the EA architecture from China to the world stage. However, Volkswagen's journey, like many other automakers in this space, has not gone without its own set of challenges. Their ambitious SSP platform, intended to underpin future models, has faced repeated delays due to software issues. This pushed back the launch of key models like the ID.4 replacement and Porsche's new electric SUV back by about 15 months. Despite these setbacks, Volkswagen's strategy to collaborate with Chinese tech companies like XPeng and Horizon Robotics shows their determination to stay competitive in the increasingly competitive electric vehicle field. For instance, Volkswagen and Horizon Robotics demonstrated significant strides in autonomous driving, which is critical for smart electric vehicles. So what does this mean for NIO? Firstly, it affirms the importance of NIO's focus on technological innovation. While other manufacturers are struggling with software and platform issues, NIO's investments in proprietary technology and strategic alliances are setting them up for a very bright future, in my humble opinion. Secondly, the competitive landscape is becoming increasingly collaborative. NIO's partnerships and alliances like the Battery Swap Alliance are not just about immediate gains, but building a sustainable and competitive ecosystem. This approach aligns with the broader industry trend, even a global industry trend, where automakers are realizing that collaboration can spur innovation a lot faster than having their own isolated efforts. So to wrap things up, NIO's strategy of prioritizing technological innovation and building a comprehensive ecosystem over merely just chasing sales numbers is not just a bold move, it's a necessary one, especially in a field like the rapidly evolving EV market. While this approach might pose short-term financial challenges, it positions NIO for sustainable growth and industry leadership in the future. Anyways, that wraps up today's episode of the Courtside Financial Podcast. I hope you found this deep dive into NIO's strategy insightful. Just remember that technological innovation is the key to long-term success in this game, and in my opinion, NIO's one of the players leading the charge. That's going to be it for this episode. If you took anything away from it that's positive, make sure you hit the like button, make sure you hit the subscribe button, make sure you click that notification bell icon, join the free Courtside Financial Discord, leave a comment down below. All your engagement really does go a long way in helping out the channel. Happy Friday. Hope you have a good weekend. Happy to be back from vacation. And we will see you in the next installment. Thank you for your support. Peace out.